6:55. It's time to delve into the world of business inside of Business Express. As to help me do that, I've got the Horsemen in the building, all three. Bolariwa, Wane, Christian. Good morning, gentlemen. How are you?
Good morning, Lagos. Good morning, Folu.
Morning, Lagos.
Excellent. Great to have you all here. Now, Lagos, as usual, join the conversation this morning, please, simply by using the hashtag BusinessExpress981 on Twitter or by sending in your messages and your comments to our WhatsApp number on 0809 444 0981. And last but not least, do note that we are streaming live on YouTube. So in true Business Express tradition, let's start with a recap. Best tradition, let's start with a recap for the stock market for Monday, shall we? What happened, gentlemen?
Okay, so the market continued the upswing yesterday, gaining 0.37% to close at 32,962.82 points. Year to date, we are still down by 13.81. The market cap crossed the 12 trillion line to close at 12 trillion.03. The top gainer, Unilever, gained 8.2% to lead it top gainer chart, while we saw Lafarge declined by 10% to close at 18.9 naira. The naira was closed at 362 naira to a dollar. What we also saw yesterday was that there was pressure in the Bureau de Change and the parallel market end of the market, with the market naira losing 50 kobo. Well, it's not unusual for a season like this, at the election period, where we're seeing a lot of investors check out of the market. So it's expected that we would continue to see pressure on the currency.
Their results.
Generally, I think 3% to close that. For me here is the fact that the cost of sales grew faster, around 9.5%. But then I think the key for me is the fact that if they're done with the road at Apapa, then probably they will apply.
They have so far released 105 people all. But they really are. Let's take a look at this.
Okay, so in total, the 105 delinquent debtors have an outstanding obligation of 6 billion naira. That is staggering.
Please, what's our budget again? Okay.
Well, the issue that the banks had some years back, and AMCON was supposed to resolve this by the business owners that they took the loans from. The circular from AMCON shows that this delinquent debtors have not been responsive in terms of having engaging AMCON to find a resolution to this loan. Typically, what AMCON would facilities like this is to invite the companies involved and discuss an amicable way of getting this loan sorted out.
Okay, well, speaking of companies involved, just for the sake I haven't seen this list, so some of the biggest delinquent debtors, according to a tweet by Stockman Nigeria, Capital Oil Gas Industries Limited, that's Ifeanyi Uba, top, Nikon Invest Limited, Jimo Ibrahim, By Courtney Limited, Wale Babalaki, Joseph Dam and Sons Limited, Kutei Family, Tinapa Business Resort, Cross River Government. I mean, okay. So
well, ordinarily, what you would expect this kind of action by AMCON to do, which is tagged name and shame, is probably to at least get these people more like a corrective measure. But I don't think this is going to achieve the desired result. This is not the first time that AMCON will be doing this.
But then they say they brought this out because these are some of the debtors that refused to meet them at the negotiating table.
I think it's a character thing. Okay. So some of these guys are not going to see this as a big deal. And we live in this kind of environment.
It shows capacity. Shows capacity to handle things.
But really, I think it boils down to the typical attitude businessmen in Nigeria. The kind of response people before loans are obtained would crawl on their needs, but when those loans are gotten in terms of accordingly to servicing obligation, you don't get the kind of response you would expect. But also you also want to flip it on the other side. Maybe you want to look at the cases to also pay in terms of the environment they operate in.
Okay, but wait, I may be, no, these businesses are reviewed before they are permitted or given these loans. What can be done to adjust this attitude of not servicing the loans as and when due? And why would you give out a loan of such a magnitude to a company that has to pay back? They're not operating in a different country. Well, operating here.
So at the point when the loans are given out, you would expect that there will have been some metrics that will have been looked at. So some parameters, there are projections.
Yes, there should be projections.
But all these things are subject to environment. You are projected that there's going to be 7% growth, and we found ourselves in a recession.
We not also
that would change the business dynamics, and some of those businesses are highly leveraged.
Agreed, but
everybody
else that's not owing.
It also boils down to the way you have configured your financial strategy. So if you are highly leveraged and there's a major shock, take out the fact that this points to character, because what AMCON has simply said here is that these guys have...
And look at capital oil in an industry where they are the level of regulation, and then the capacity for them to grow their revenue seems constrained. So even if they're coming to the table, I don't know what they're going to be discussing if they say government should increase XYZ issues. It can't increase power price at this moment. So what are they coming to the table to discuss?
Yes, there are certain factors that are actually hindering some of these companies who are debtors from hindering them from making repayments as agreed. Part of which, for geometric power, like one has said, is the clarity of the industry which it operates. The power sector, both the generators, the Gencos and the Discos, have been screaming for ages.
Yes.
The way it is, incentive in terms of increasing tariffs for them to actually remain profitable in business and profitable. So if government is not able to do anything about that, then I don't think it makes too much sense for you to expect them to service a facility that they're not even able to, generate anything from. Yes.
Okay. Maybe just show up and repeat that and just say, listen, government hasn't done this, so this
exactly.
I'm quite sure they must have done that, but still, they're still debtors, so their name will come up.
Yeah, true. All right, thank you. Move on. This one is in from Rosemary. No, actually, sorry, that's not for us. That's for Charlotte Thompson for the nighttime. Michael Oyenukwe from Marina says, I thought that the road construction at Apapa is being handled by Dangote AG, not Dangote Cement. How come the tax credit will go to Dangote Cement? Please clarify, sir.
The cement, like the limestone they use, is from Dangote Cement. So it's more or less like transfer.
Oh,
so business transfer, they'll do like Dangote Cement will give the construction company.
Oh, right.
So invariably, Dangote Cement
will still get that. Got you. Rainmaker up on WhatsApp says CBN is blindly spending our hard-earned dollar defending a falling naira. What happened when we can get? What will happen when we can get dollars again? What are we going to fall to? The effrontery that the money managers even have to say it to international observers that it will continue defending the naira. Gosh, I think they're doing quite the opposite. And about debt, there are laws and it contains processes of the same club. It's a sham. It's a sham, says Rainmaker. Very serious words there, serious accusations. While Paul comes in to say the truth is that even commercial banks are mandated by the CBN to publish names of delinquent clients quarterly. Any impact? In fact, it's the banks that suffer because these delinquent customers instead start filing lawsuits contesting the balances, and all the publication doesn't stem the tide at all. There should be more punitive measures against delinquent customers rather than mandating banks to publish their names, says Paul. Okay, let's keep it moving very quickly. Back to corporate earnings. We looked at UBA GTB last week. Today, let's look at Zenith Bank. How exactly did they perform? We got a couple of minutes for that.
So, interestingly, I'll feed through the last story into this one.
Okay.
As customers pay back on loans, obviously the banks are not in a hurry to grant new facilities, and that's reflecting in their results. So you see that for most banks, gross customer loans have reduced. For Zenith Bank, we just released its results, it went down by 9% in the quarter on quarter. A 1% uptick in Q3 gross earnings due to an 11% growth in interest income to 110.39 billion. I beg your pardon. Interest earned on customer loans went up by 8 factors drove the increase in interest income, but fees and commissions, income earned from fees and commission declined significantly, 24%. So an impairment charge that was flat for the quarter at 0.79%. Overall, for Zenith Bank, the result is not bad.
Okay.
We're actually waiting for them to shed light on the 2.5 billion tax credit.
I'm surprised though. How did
We're-
they get that?
Yeah, we're waiting to see how they came about.
Right.
Yes.
Okay.
But
Thank
on
you.
the overall, it's a good result from Zenith.
Okay, thank you very much for that. I really wish we had time to quickly touch on the insurance sector, but unfortunately we are out of time for that one. So I'll round up with a couple of messages. Henry Emmanuel says, simple answer for you, I guess, my question as to how they keep getting these loans. They get the heavy loans because of connection. When I was doing my professional course, a professor said in a credit evaluation class, there are 5 C's of lending, but in Nigeria, there's a final small C, connection. Without that last C, your loan request is invalid, says Henry Emmanuel. All right, thank you very much, gentlemen. Christian and Bolario Atwande, thank you very much for coming, and we appreciate you. And thank you to everyone who sent in messages and commented. Do remember that you can catch a replay very quickly up on our YouTube channel /smooth981 FM Lagos. Coming up next, some great music. Miss Lauren Hill will be serenading us to kick things off with. And after that, at 7:30, it's detailed newspaper analysis inside of Freshly Pressed. Good morning.